Hello YouTube, we have the calm before the storm. The S&P is not really moving, and the big question is, the storm is coming tomorrow, but who is at the helm of the boat? Is it the bulls or the bears? We're going to try to answer that today. I'm going to go through and look at everything I would normally do to try to get prepared after the market close for the most important day for probably the next 3 months. This is the Super Bowl, and we got our final boss, Jerome Powell, coming in tomorrow. We're going to come back and look at this article. What I want to show you first is that I'm noticing that the technical analysis is getting pretty good here. Options are also flashing some signals, but the first thing we want to look at is going to be the daily candle we have formed here. So I noted that the Friday and today's candles look very similar. So we have to ask ourselves, what do these candles mean? Well, it means we gapped down, we pushed down to a new low of the day, just like we did on Thursday versus Friday. We gap down, push down, close up. Someone bought the dip. And we note that the real body is larger on the downside than it is on the upside. Today, we almost perfectly rejected off that high. 386.25, 386.12. We did pierce to a lower low, which means we got a lower high and a lower low versus Friday's candle. And we noted before that a lot of the selling that happened into Friday was people selling their stocks back to cover their exposure for the shorts. And then they bought it all back up yesterday. And now they're probably buying it back up more. There are more sellers than buyers. That's why we printed a lower low and a lower high. But the candle looks very similar. They control the open, and then they look and see what happens. This really looks like a major test here for the bears and for the bulls. And I say this because I was expecting an inside bar for the large part today on SPY. It did not happen. It's pretty close. I was really watching the Friday range as well. When we look at QQQ, the chart is much cleaner. And a lot of people were pointing to Tesla and Amazon today for notable strength. Man, that was really nice to see. So really looking at a short time frame here, volume's low, but let's look at the candle versus yesterday. We held the high and we held the low, which means that's an inside bar. And this becomes really important because if we now look over here at the Dow, I understand. Yep. So the Dow is what's really dragging SPY. The Dow is softer, but tech is stronger. So S&P is currently getting dragged up by QQQ or the Qs and getting dragged down by DIA or the dog, right? That doesn't really look all that great. If we now try to smooth this out to look at a weekly chart, yes, we're zoomed in pretty close here, and I put them onto full candles for those boomer eyes, so please make sure to smash a thumbs up and drop me a comment to let me know you notice it and you appreciate it. When I look here at the high of the week, 388.55. I look at the low from 2 weeks ago, 388.42. We talked about this. So this looks like a perfect rejection off of our key pivot. And right now we're battling back for our high right here, 383.9. That's our gap zone. So what this really looks like to me is a push-pull between our gap, which is where there was a lot of supply and demand, but then also digesting last week's low, digesting the open, digesting the low as well. Why? Because if this ends up being a bull reaction tomorrow, what does that mean? They know exactly what it's going to take to not only get it to 388, but then to get it to 390, the real bodies. I'm calling it roughly 395. So if the goal tomorrow is to flip long and we're going to rally by 10 points, what happens? Oh boy, we're roughly at 385. That's right. And now they know, again, we've price discovered, price discovery, we're discovering. We're the buyers, we're the sellers. And then same thing to the downside. We already know what it took to break to a new low of the week. Why? We did that yesterday. And then what did we do today? We printed a new lower low. So why is this so important and why am I spending so much time on here? Because what this tells us is that we're still consolidating and we had a test yesterday in the weekly for the weekly chart. And then today we're noting that we did print a lower low, but we got a snapback. And what that means is that, yeah, technically the buyers want to buy the reversal, but shorts are covering into here too. That's what it tells me. No one's really shorting the breakdown. So as we break down, no one's really ready to short it, which means that we're kind of in equilibrium. Equilibrium just means that the coil is coiled up and then it's set to release. So as we now zoom out to our daily chart and then to our weekly chart, we want to make sure that we're not super hyper focused zoomed in. Because whether we're looking at a 1-day chart, a 1-hour chart, a 50-minute chart, or whatever it is, only looking at this one pocket of data is pretty naive because we note that we are now closer to support than we are to resistance. What does that mean? Well, we would expect to find buyers there, and we did. Check. So is that just people who were covering because we're close to 380? Again, that 360, 370, 380 staircase level that we put on the weekly here. 360, then 370, then 380. Is that just the $10 push? I don't know. If we do break down, though, and we lose last week's low, and last week's low, did we already lose it, actually? Oh, yeah, we did. We gapped down to it. So last week's low was 382. Losing that again tomorrow and then pushing below 380, for me, that is a nasty bear break. We're losing support, and that's where we can reject down to 370 or 360. We talked about going $10 to the upside. Well, what if we go down $10 to the downside? Roughly 374, which is a really important area for me. I'm notably watching this 373.3 low here. And then we got a 370 low. So I'm really watching for about 373 to 372.50 is an area where I would expect something's going to happen. We also have our close here at our open here at 373.6. So roughly 373-ish. If we're going to go down, is about what? It's also about 10 points from here. Yeah, so about 10 points up, 10 points down. And what'll be really important for me is where we open, but more importantly, how do we act at the open? If we are lower, again, we're closer to 381, maybe 382, or last week's low, do we hover at the open? Because that's what happened here today. We gapped down, pushed up to the high from Friday, just rejected, and then chopped up all day. QQQ managed to hold up a lot better. But we also note that this pattern is right at the exact same area. So if it's at the exact same area, it means that this area kind of seems really important at about 285. Yes, kind of really important. So if this level is really important and we hold it, what does that mean on the weekly chart? Oh, baby, oh, baby, oh, baby. We noted 394, about 10 points up. That gets us almost back up here to our green line. What is that? That would turn into a gap down pump up. Oh, yeah. And that's not even our highest level of support. I think that if we start to go, we could get to 400. We could also even get to 405. Is that a guarantee? No, you do not have a Justin guarantee. We're going to go to 405 by 4 o'clock on Friday. But I'm thinking about what would it take for us to get there? I can see it. If we're wrong, though, and we hide everything, we're already in a bearish pattern. If we lose last week's low and then print a new low of the week, that is where the pain comes in. That's where the bears start flexing. And that is where the bulls are going to start to sell back. Our IHS is broken. So if we can't hold the relative low, we go to our local low. We're going here to about 371, 362. What happens there? I don't know. We'll see what happens going into that. So now let's read this article and let's wrap up. But I might make today's a couple extra minutes just because I want to show you what I normally go through too. So Fed set to reveal pain. So now that we've looked at the technicals tell us that we're right at weekly support. We could rally up as much as, how many points is this, right? Oh, geez, right? 25 points or 250 points on SPX. Yep, that would be a massive move if the low holds and we get relief. Does it really matter why? Does it really matter that, Jerome said this or he said that? If we go up, we go up. We make a new high of the week. It is starting to go big booms. Why? We're taking out the local lows. Over 390, we're going up. So we're expected to have pain reveal. The question is, has this been telegraphed well enough ahead of time, or are the wheels in motion, and as long as they stay in motion, we are going to step lower before we get that massive drop? I've personally not seen capitulation for the broader market, but it does not mean we're going to get it. FOMC unemployment forecast will probably be revised higher. Rates is expected to hike by 75 basis points. Right? Jerome's not going to say we're going to go into recession, so he's going to say there is pain ahead, right? That's what he's been saying. Pain means recession. And they're talking about employment. We're really going to focus on two numbers as we get a little bit further. But if we start to lose those lows and QQQ or the Qs break that double daily inside bar and break the weekly inside bar bearish, yes, that is extremely notable. It means that Apple's probably breaking down. Tesla's probably breaking down. The market is likely breaking down, like what happened today. Woo, right? Haircuts everywhere. Who got one? Ether, BTC, gold, oil, the DAX, the Russell, everything but Apple. Whoa, right? And Apple, it's giving me some flashbacks of what happened to ARK the other week, where it's like, Apple's so good, so silky, so smooth. It's green. It must be good. It's a hideout. And I think that they're just, again, if the true move is going to be lower, Apple's got a whole bunch of money locked in there. It's the biggest company ever, excluding Aramco. Anyways, every ETF red, China red, emerging markets red. What's green? The dollar, VIX, and yields, which is exactly what I would expect if the undertow is bearish. Yeah, the undertow. Markets Royal. This is from, this was published on the 17th, which was, I believe, on Thursday or Friday. This was before that article we just looked at. Markets roiled by inflation leave investors with nowhere to hide, except for where? The dollar, the VIX, or in yields. So that's what we're noticing. The retreat of commodity prices does away with inflation hedge. There is nowhere to hide. Right? What does that mean? The Fed's knocking on the door. The question is he going to knock it down? Or is he going to huff and puff? Or maybe just run away? History shows no major asset class will provide a haven. Oh no, okay, there's the deep dark winter scares. Neri Rubini was out there calling for -40 today. We'll talk about that tomorrow if there is downside. There's already plenty of fear out there. Right, Peter Oppenheimer, the Goldman Sachs chief global equity strategist today, told us that stocks have not fallen that far yet. Negative outlook for short term. Haven't fallen that far yet. He's like, hey, don't bet against us. We're going short. We got that big short. Don't go against us. Fed's federal funds rate forecast. So this is really what's going to drive the pain. And everyone knows this number here. I don't want to get into it today because it's going to make the video super long, but there is also GDP for the third quarter, which is now looking really soft. It is coming down, down, down. You can go to, I'll talk about it tomorrow if we need to. I'll skip it for now. There's going to be plenty to talk about. This is what we really want to pay attention to for tomorrow. So when we hear higher for longer, I think we're going to have higher unemployment for longer. I think we're going to have higher interest for longer. And it's really about, I want to hear what Jerome says about the terminal rate. I want to hear what he says about the rates of where he's going to pause, if he's going to pause, and then what happens. I'm expecting that we're going to hear that we're going up the 4% and then pausing. For me, the question is, does he do the hikes before the end of the year? Do we get to 4% by the end of the year? I think we could. I think that would kind of rip the Band-Aid off, and he can have the excuse of we're hiking into positive, strong economy. We got a really strong labor market, and there's lots of room for jobs to come down. I think we have to maintain 50,000 monthly jobs to go higher, and we're printing 350 right now. So 350 is a lot higher than the 50% requirement to maintain. And because we're noticing that shelter or housing is now starting to go up. You look at the PPI from Germany today. What that tells me is the only way we're able to reduce that is by hitting wages. If wages are showing that there's 350,000 jobs added right now, it means people are competing for workers. Companies need to be going down into the dumps. So there's no competition because we're in a dumpster fire. So they need the unemployment higher. I'll be really focusing on that tomorrow. This is going to be really important. Are we going up, flat, or up, down? As of right now, the market is having a really hard time. Look at these dates. The quarterly meeting. You should know what it means. The stakes are high. My notes pretty much tell me that until S&P can print a weekly higher high, there are no longs. So the inside bar is there. Risk reward wise, if we hold the weekly low and we push up, that is going to be the best swing trade or day trade. It's not going to be like you want to hold on to it overnight. Maybe you want to hold on for a day or two till the trend breaks, then you hop out. Otherwise, like everything's against us right now. We're pushing the rock up the hill. The question is Jerome going to hold it up, or is it going to roll over and not come over anyway? We're going to bring you what the Fed said tomorrow. And otherwise, I just want to look at a couple more things here. Video's already 14 minutes. I was planning on it being shorter. Here we are anyway. Hopefully you enjoy it. Smash a thumbs up, please, and thank you. The put-call ratio was roughly 1-for-1 for large orders over $100,000, which means ones that actually move the market. When I look here to the put-call ratio for the broader market, it got a huge haircut today. It's down to 0.88, which means people are buying more calls. Does that mean they're selling calls? Does it mean they're... I don't know. It just means there's more call than puts. Puts are at 1.46 for the SPY, which is pretty elevated, but it's pretty much right on par. It's roughly 1.3 on average. Does this really matter? Nope. Just right to the middle here. And other than that, we got the 2-year note right around 4%. Man, what a crush, right? Yeah, higher high, holding last week's high. That's really bull. Looking at the 10-year note, We're over 3.5, over last week's high, over our 52-week high. S&P should be at its 52-week low. We talked about this on the weekend deep dive. Encourage you to watch that if you want to learn more. Otherwise, yeah, please be careful. Watch your stops. And as always, mind your risk and stay within it. I'll see you guys tomorrow. Wish you all the best of luck. Thanks.